In the last major recession during 2000 and 2009, I was just 11 years old.
We are in a recession.
We're in an unhealthy market. Consider yourself lucky.
Seeing my family going from cutting down on a few expenses to getting laid off and ultimately struggling for a major portion of my childhood was impactful enough for me to know that recessions are truly a terrible time.
Lehman Brothers is going bankrupt.
What if I told you though that this time around, instead of being worried like I was as a kid in the last cycle, I'm actually excited for what's coming next and why you should be too. And truth be told, I had no idea what was going on in the economy or even the financial markets, but I knew back then through my young eyes, things were not good. Well, in this video, you'll be learning everything you need to know about the data from past recessions, how long these cycles have lasted before, and what you can do to take full advantage of the opportunities of this upcoming recession so that you can make good money, you can survive, and you can come out very, very wealthy. The CEO of JP Chase, Jamie Dimon, said that in May that the federal government only has a 33% chance to avoid this recession. About a few months ago, Elon Musk tweeted that we're probably already in a recession and that this could last anywhere between 12 to even 18 months. On top of that, we got a recent survey showing that 75% of Fortune 500 CEOs said they were also expecting the recession. I think it's clear to say, even without some of the head economists or the CEO stepping in and giving their thoughts on recession, we are in a recession. We are seeing the effects of it. We are seeing spending dropping. We're seeing a lot of people either losing jobs or not wanting to work. And right now, things are not looking good. With that established, let's talk about what happens to the economy during a recession or why these experts are even making these type of predictions. And let's quickly cover what a recession by definition is. So many people often confuse market crashes with a recession or even a market depression. Well, let me break it down here. A market crash is an abrupt drop in stock prices, which may trigger a prolonged bear market or even signal some economic trouble ahead. Now, bear markets are generally considered when asset prices are below the 20% from all-time high mark, and market crashes can be made worse by fear in the market and herd behavior among panicked investors to sell. Knowing that, we have recessions, which are a period of temporary economic decline during which trade and industrial activity are reduced, generally identified with the confirmation of a fall in the GDP in 2 consecutive quarters. So we recently got word that it is confirmed, and right now a depression may also be on the way, which is commonly defined as an extreme recession that lasts 3 or more years, or which leads to a decline in real GDP of at least 10% in a given year. Well, to bring us up to date, we've had the market crash. We've experienced a few of them, especially if you guys have invested at all into stocks or crypto or any type of volatile moving asset. I know even with watches, there was like a report on the Rolex Daytona that has finally come down in price, and it's been more than 20%, so some would even consider a market crash happening within those different industries too. So lately it seems like a lot of people are going broke. It seems like gas prices are continuing to go high. It seems like even on my end, like I gotta start looking at my expenses a bit more and I gotta prepare for what's coming next. It's times like this though where we begin to reflect and we have to ask ourselves the question, what happens to the economy during a recession and how long could this last? Well, the recession that we're dealing with right now, which is caused by rampant inflation, rising interest rates, quantitative tightening, and asset bubbles that are getting popped, seem to be a bit more different from some of the other recessions we had before. What is common though throughout a lot of these recessions, even though they've all looked a little bit different, is one, mass layoffs. During this time, people are out of jobs and the unemployment rates continue to increase. The past couple years have been considered to be an employees market where workers could demand higher wages, but during a time of a recession, it seems like the power goes back to the hands of the employers. What we also see during a recession and what the economy experiences, we also see market crashes. This is where stocks go down, crypto goes down, real estate goes down, you name it. A lot of these asset prices are going to continue to go down, which puts more fear into investors where people want to continue either selling off or not wanting to buy back in. What we're also noticing now is that companies are going out of business. We're seeing this happening, especially within crypto, where a lot of these exchanges are going bankrupt. They're filing for Chapter 11 and the financial risk continues to increase. We're seeing more risk of defaults and we're seeing a lot more businesses fail, which also thus affect us because our money gets locked up, or employers are laying off people who may have been working at that exchange. Last but not least, interest rates remain relatively high, and this means getting loans are going to be more difficult. We're going to see credit card interest rates going back up. We're going to see mortgage rates going up, and it's times like this where interest rates go up to reduce inflation, but people want to take less and less loans out because of the climate of the overall market. US stocks have just entered bear market territory this month, with the S&P 500 down over 23% year to date. Inflation is now targeted to be over 9%, which is a 40-year high, and mortgage rates are at the highest level since 2008, with mass layoffs already starting. More than 19,000 American workers that have been laid off in 2022 in the tech sector alone. So I think it's safe to say that nobody wants a recession to happen. Everyone is opposed to it, and we'd rather be in that bull market. We'd rather be in euphoria where things are growing. But let's talk about why recessions are actually important. So if you're investing into crypto, let's talk about Bitcoin here. You might feel like the current bear market is never going to end. It's going to continue to last, and you can't imagine Bitcoin ever going over that $100,000 price target once again. Well, history shows that this is pretty unlikely, and it also shows that Bitcoin has been declared dead. The market has spread that FUD over 300 times over the course of its 13-year lifespan. The data shows that the first major bear market of Bitcoin was back in 2012, and that year was marked by a series of hacks and other negative events that contributed to the uncertainty around Bitcoin. The duration of that lasted 185 days, and the peak price for Bitcoin was at $7.08 with a market low of $4.22, and that resulted in a 40% decline. Now, the second major bear market surfaced shortly after the first in the form of lawsuits from the exchange hacks just months before, and these series of lawsuits ushered in even more negativity and a lack of faith to market participants at this time. Well, the duration of this lasted just 111 days. The peak price was $13.35. The market low hit $8.40, and at that time with a 37% decline. Now, the third major bear market began back in October 2013 when the Silk Road was officially shut down by the FBI, and the duration of that, believe it or not, lasted even longer. It lasted 415 days with a peak price of, get this though, $1,149.14 and a market low of $197.27, or a 83% decline. Now, this analysis here demonstrates that the current bear market isn't Bitcoin's first, and it probably won't be its last. It also shows the straight potential that we can see every time we get a new market cycle. Just like how the peak price was once at $13 and then we saw a jump over $1,000 in less than a few years, it really just shows the possibilities of what happens after a bear market. To back up that point, following the end of World War II, the decline in government spending led to a huge drop in the GDP and also caused a recession during that time. The recession sucked. We even heard about the Great Depression from the history books, but right after that, the American economy took off, producing one of the strongest expansions on record, lasting over 7 years. Now, the early 1990s recession had something interesting. This was caused from rising inflation and the Feds also raising interest rates for about 3 years. And once that recession ended, we also entered what you guys may have heard of, the dot-com boom, where the markets experienced 10 years of growth. The point I want to make here is that if you can survive this upcoming recession we're getting now and make smart financial decisions, you make those bets, you will be in an incredibly great place following the next couple years. Now, the question is, how though, Brian, can we prepare for a recession? Well, it's during these times where you want to dollar cost average into the market and stay heavy on cash positions. To even get to that stage, you need to study your own risk tolerance, know your income, know your expenses, and thus get a better idea on how much you can afford to invest, and also choosing which assets you would like to go into. If you want to be on the safer side, you can always choose the stock market indexes. Over time, they've continued to grow, and even during these bear market times or this huge dip, you would still be able to, I think, find a lot of profit over the next 5, 10, 15, or even 20 years of this life. If you already have investing down, say you want to go a little bit riskier, you're choosing crypto, you're choosing altcoins, you're choosing even the NFT market, there are still things within your own realm, your locus of control, that you can take more seriously. It's times like this where you have to know exactly how important it is to have stable cash flow coming in. Take your work and career seriously and show your employer that you are not replaceable, and that jobs right now, which are becoming becoming increasingly vulnerable during recessions are something that you are able to stand above your peers or show that, hey, you are needed with your company, or if you're self-employed, you're able to continue diving deep and securing clients and making sure maybe the contracts are set so that regardless of whatever happens within the market over the next few months, that you are going to still generate good, consistent cash flow. If you do have any debts or liabilities, make sure you prioritize paying those off as soon as possible. In this climate of increasing interest rates, you don't know how high those interest rates could spike, and the best thing to do is to make sure that you lower those while focusing on your income as well. If you have a lot of debt, if you have a lot of credit card bills, what you want to do is to budget, to create one, to check it, to use a lot of apps, and there's things like Mint Mobile or Truebill where you can take a better understanding, a deeper analysis of your own personal finance and make sure that you're able to stay afloat during these times. Now, while those are more active things that you can do, there are definitely things that you don't want to do during these times too, and this is going to be taking on new debt, whether it's mortgage loans or auto loans or credit card debt. And although the price of some of these little shiny objects may get even more enticing while things are down 20-30%, please be very wary about signing a new loan and be aware that during recessions, it is a risk to make a commitment to a large purchase or a loan when you're unsure of what may happen next. On top of that, make sure you don't panic sell your investments, and if you're dollar cost averaging and you feel as if you keep buying the dip that keeps dipping, remember what follows recessions and market crashes are usually a period of growth. Last but not least, this is one of those tips that I would say is really important, and you just want to make sure you're not isolating yourself, whether this is socially, from your friends, financially, or just mentally. Make sure you're able to surround yourself with good individuals that can lift you up and remind you that good times are still ahead. If you're having trouble finding that, if you got some negative social circles, it's okay. I've been there too. And this is why the beauty of the internet, these communities are still around for you to access 24/7. And all you need is a cell phone, you need a Wi-Fi or service, cellular service, you're good to go. Now, those things I mentioned are just how to prepare for a recession, just some of the do's and the don'ts, but there's also another side to this. There's a way that you can profit immensely during a recession too. Ladies and gents, I need to stress how important it is for you guys to start a business, start a side hustle, grow a following, look into TikTok, YouTube. There are just so many ways that you can currently grow. Anyone watching this right now may have some type of interest. There's something that you are good at, and if you don't know what that is just yet, you can discover that by trying new things often. I never thought I'd be a creator here on YouTube. I never thought I would be in the situation I'm in now. I never thought I'd be a good enough speaker or smart enough or whatever it is. This is very unexpected for me, and I always thought I was just a very average Joe, which I still believe to this day. If someone like me was able to do this, I'm so confident that anyone who's driven enough can do this too. On the other end of, taking that step of faith, of crossing that bridge, what lies ahead is a time of stability where you can find yourself making immense profits throughout these times. Some of the largest businesses in the world got started during a recession, and recessions also mean less competition in the marketplace, and there are way more talented individuals looking for work that you can partner up with or hire, and it would also show exactly how strong that you would be able to last in a bull market too. Simply put though, the biggest way for you to be able to profit from the recession is taking that leap of faith. It's not just getting through, it's not just surviving, it's taking the step and being a long-term believer in some of these assets and being able to buy up that dip. You don't need a YOLO, you don't need to use leverage, you don't need to do anything crazy, pull out a loan. You can just dollar cost average very slowly, even $100 a week, or if anyone's struggling like crazy, $100 a month into this market during this time. If you're able to continue investing throughout this market dip, when things recover, you're going to be seeing an immense payoff then. According to the Motley Fool, we even had word that even if you had invested at the worst possible time during the past 3 recessions, you would still have made a great return. So my advice to you to close this out, create an investment strategy and stick to it. Make sure you stay disciplined, stick to it, and keep following through. Although it can get sucky at times, although, looking at the credit card bill is scary, you don't want to open up that Amex app. Let this recession be the time that you begin taking control of your financial freedom, whether that means outperforming colleagues and rising in your company or just creating that business you've always wanted to do. Simply, this right now is the time for you to get started. Now, ladies and gents, if you're watching this video, if you somehow made it all the way to this end, you're going to be that 1% of people because you are looking for this information. You are dedicated to even watching a video all the way till the end. There's a whole bunch of entertainment on this platform, but you're choosing to better yourself by learning more, doing the research, and hearing out just a random guy here on YouTube, but also learning that there is a better future ahead, and this is just the beginning step in a very, very transformative life. The recession opens up opportunities, but you need to get started now, and I can't stress how important right now the time to start is going to be. Don't wait until Bitcoin nears $100,000 once again. Get it while it's on a discount. Invest slowly into the market, learn these skills, do some networking, and I know that you guys can make it. If you guys did enjoy this video, drop a like down below so other people can see it. Share this video too if you guys think it may also help someone out. And like always, I appreciate you guys for watching this content. Don't forget to follow me over on Twitter and on Instagram, link down below in the description. Subscribe if you guys like videos like this, and definitely let me know. I read through all the comments, so if you guys have any advice for anyone else that may be going through a hard time and you want to share it down below, put it in the comment section and we'll check it out there. Now, thank you all so much again for watching. Have an amazing day, and I'll see y'all soon. Peace.